So world markets remain relatively calm considering the repercussions of what's been going on in Israel, and what the potential repercussions might be. And I suspect this really amounts to investors putting faith into the diplomatic process which is underway, which is been underscored today by the announcement that Biden is going to visit Israel tomorrow. I suspect he wouldn't be doing that if the Americans weren't pretty confident they could come away with some form of political victory for Biden, because it's obviously an important domestic constituency ahead of an election year for him. One area where US diplomacy has been in overdrive in the last couple of days has been in terms of repairing relations with Venezuela, which totally coincidentally is also a major oil producer. There's talk of basically an oil for elections deal, which has stabilised crude markets overnight. Meanwhile, in China, the authorities undertook new measures to cap interest rates and improve liquidity, but there's also renewed focus on the ability or otherwise of Country Garden to meet a bond repayment that's due this week. So that's sort of it on the macro front. In the UK today, not a lot of news. Frontier Developments have updated the market and announced an organisational review where they're endeavouring to reduce their costs by 20%, which probably mainly means people. The company that I've sort of been focusing on a bit on mainly this morning is ShoeZone, which is a rapidly growing value for money shoe retailer. It announced that its revenue had grown 6% in the full year, ended the period with 323 stores, very busy in its sort of portfolio. It's closed 72 stores, opened 35 and refitted 15. So this is the kind of market where you can do that sort of thing because landlords are very keen to do deals with retailers that are actually growing. But ShoeZone sold just over 14 million pairs of shoes in the period, an average price of £13. It puts it firmly in the category with companies like CardFactory, Greggs, Wetherspoons in their respective verticals. And these are businesses that benefit from scale economies shared, often mistaken for pile it high and sell it cheap. It's much more challenging business strategy than that. It involves building a reputation for value for money by reinvesting the savings you get from the scale you can achieve in this type of business back into price, and you build it through word of mouth. And that's essentially what ShoeZone is in the process of doing. It's a very challenging market to do it in, but is so far doing a very good job.